Hello friends, welcome to my channel JD's Guidance. Friends, in this video, we are going to continue our uh, topic, that is overview of Indian financial system, which we started in one of the previous videos. Friends, in this video, I am going to start with the first component of the Indian financial system, that is the financial institutions. So in the previous video, I have already explained you what is a financial system, and there I have given you some introduction about these components. Now let's get started and let's now directly see the first component, that is the financial institutions. Now see, financial institutions in India can be classified as banking, non-banking and regulatory. These are the three components in which the financial institutions in India are classified. Now let's in these categories, as you can see here, each of these categories comprises of subcomponents and which are very complex. So in this video we will just talk about the first component, that is the banking institutions. So let's get started and see the first component under financial institutions, that is the banking institution. So I'm writing here banking institutions. Friends, in India, let's first understand what is the meaning of a bank. Now, bank is any institution which does two things primarily at its core. That is accepting deposits and making loans, okay, or giving advances. These are the core activities of a bank. So any institution which does these two activities will be considered or can be termed as a banking institution as per the Banking Regulation Act definition. So remember, so any institution, whether it qualifies to be called as a banking or not, will depend whether these two functions are primarily done or not, that is taking deposits and giving loans. Now, banking institutions in India can be subclassified into three different categories. So, first let us see it this way. So, all the banks in India can be classified as scheduled banks and non-scheduled banks. Non-scheduled banks. So this is a very important concept that you must know, that what is a scheduled bank and what is a non-scheduled bank. Scheduled banks are those banks which are included in the second schedule of RBI Act 1934. So when any bank name is there in the RBI, okay, second schedule of Reserve Bank of India Act 1934, then we can say that is a scheduled bank. Whereas those banks which are not included in this schedule, they are termed as a non-scheduled bank. Now the question is, what is the importance of being there in the second schedule and being not there in the second schedule? So remember, any bank which is included in the second schedule of Reserve Bank of India, they have to fulfill certain norms of RBI. They have to maintain, or they have to see that the regulations or the requirements of RBI is maintained. However, these banks will be subject to certain benefits or certain help from RBI, like the RBI may provide them financial assistance, or they may be eligible for borrowings from RBI. So this is in very short that what is the advantage if the name of the bank is in second schedule or it is scheduled bank. So any scheduled bank which is included in the second schedule of RBI generally have to follow certain norms of Reserve Bank of India, and these banks are subject to certain benefits and financial help from Reserve Bank of India. Whereas non-scheduled banks are those banks which are not included and therefore they are not eligible for certain help from Reserve Bank of India. For details, we have another video, you may refer to it. Now coming to what is the other way? Other way to classify the banking institutions is we can have as commercial banks. We can call it as commercial banks. Then we can call it as a cooperative banks. Cooperative banks. So let's see what are the commercial banks and cooperative banks. Commercial banks are those banks whose main objective is commercial. They run on commercial objectives. Now, what do we understand by commercial objectives? Commercial objectives means those banks which are motivated by profit. Their main objective is to make profit. Whereas cooperative banks are those banks, their main motto is not to make profit. Rather, their objective is cooperation, or you can say mutual help amongst the members. So, this is one key difference between the commercial banks and cooperative banks. Their objective is profit, whereas profit is required in cooperative bank, but that is not the prime objective. Here, the prime objective is self-help and cooperation, mutual help and cooperation. Now let's talk about the commercial banking structure. So in our country, the commercial banks can be classified as three categories. One is the public sector banks, second one is the private sector banks, and then we have the regional rural banks. Now what is the public sector banks? Those banks where government has a majority stake, that is known as public sector banks, whereas private sector banks are those banks where the majority of the stake is held by the private bodies, individuals, etc. What is regional rural banks? Regional rural banks are those banks which function in the rural areas. Their main objective is to spread the banking services in the rural areas. Now comes but they are also commercial banks. Remember, RRBs are also commercial banks, but their objective is rural development. Now coming, or they want to make sure that the banking services are spread in the rural areas. Coming to the subclassification of public sector banks. Public sector banks can again be classified as State Bank of India and the nationalized bank. Remember, State Bank of India is a public sector bank. It has its different history, and there are other banks which are under the category of nationalized banks. Means these are those banks which were earlier in the private sector, but due to certain reasons that can be seen in a future video, that these banks were later nationalized. So we had got two phases of bank nationalization. One in 1969 where 14 major banks were nationalized, and one in 1980 where 6 banks were nationalized. So this is a old figure, because in 1969 14 banks were nationalized and in 1986 banks were nationalized, but in course of time some of the banks were merged, and therefore this number has gone down. So now coming to private sector banks. In the private sector banks we have two categories. One is the Indian private sector banks, and the other one is the foreign private sector banks. So we see there are some banks which are having foreign origin. That means their head offices are in some other country, but they have a spread through their offices in India. Whereas Indian private sector banks, their head office is in India, and they also have wide scale branch expansion over the country. So that's some way we can describe the structure of the commercial banks in India. Coming to cooperative banks, as I already told, cooperative banks are the banks which are built for mutual help. They have their members. They follow the democratic rule of one vote, one member, one vote. So that's important to know if you have to study about the functions, features of cooperative banks. But this video is not about that. It is just to give you an overview. So under the cooperative banks, we have got two subdivisions. We have urban cooperative banks and we have the rural cooperative banks. Under the rural, we have two subdivisions. First one is your short-term structure and the other one is the long-term structure. Now in the short-term structure, we have three-tier system. We have the state cooperative banks, we have the district central cooperative banks, and we have the primary agriculture cooperative societies. So it is a three-tier structure. I repeat again, what are cooperative banks? I already told that these are for mutual help. Cooperative banks have got two types: urban, which are having its branches or which have their offices or which have their operation in the urban area, whereas there are some which has its existence in the rural area. If you see the rural areas, there are two subdivisions you can make. In the rural areas, cooperative banks which cater to the short-term financial requirement. So here we have three-tier structure where we have state cooperative banks on the top. Suppose we are talking about the state of Assam. So here we have Assam cooperative banks at the state level. Then at the district level, there are cooperative banks. And then at the rural areas, we have the grassroots level, we have the primary agricultural credit societies. Coming to the long-term structure, we have two categories here. The long-term structure has got two tier, that is the state cooperative agriculture and rural development banks, and then we have primary cooperative agriculture and rural development banks. So this is about the cooperative credit banking structure under the rural form. Whereas if you talk about the urban cooperative banks, this has got two sub-classification. You have scheduled and you have non-scheduled. Under scheduled also you have another sub-classification. Both of them has another sub-classification, that is single state, and you have multi-state. So single state and multi-state classification is there both for scheduled and non-scheduled. So those urban cooperative banks which has their branches in a single state, we call it single state cooperative banks, urban cooperative banks, and some urban cooperative banks have their operation in more than one state. So we have multi-state urban cooperative banks. So friends, this is all about the structure of banking institutions under the Indian financial system. In the next video, we will see the classification of non-banking institutions under Indian banking or Indian financial system. Thank you so much for watching this video. Do watch the following videos and do subscribe to my channel JD's Guidance. Thank you friends.